Hello dear viewers, hope you all are doing well. Welcome to revision time. In our previous video, we have studied about purchase book. A quick revision before we start our today's video. Purchase book, in this book we are recording only those transactions which are related to credit purchases. And very important point to remember, we know that cash purchases, we obviously record it in our cash book. But when we are purchasing goods on credit, we record it in our purchase book. Second very important point to remember is that we have to record only those transactions or those credit purchases which are related to main business activity. With business activity, I mean that the credit purchases which are purchased for selling purpose. We cannot record the purchase of credit purchases of assets, because we have to record only the credit purchases which are related to main business activity. In case you have missed the video, please attaching the link over here, please go through it. In our today's video, we will be studying about purchase written book, also known as written outwards book. Now, what do you mean by this book and what kind of transactions to be recorded under this book? Here we are recording the purchase written. We are recording the purchase written. When we are returning back the goods to the suppliers, we make an entry in a book called purchase written book. Here again, a very important point to remember, we can make an entry of the products which are purchased on credit purchase only. Return of goods which were purchased on credit can be recorded in our purchase written or written outward book. And very other important point to remember is that when we are returning back the goods to the supplier, a document called debit note is issued by the business to the supplier. Now, what is this debit note? Debit note is a document when a business prepares and issues it to the supplier when they are returning back the goods to them. Now, what is our journal entry for purchase written? We record it as supplier's account debit to purchase written account. So, when you're returning back the goods to the product, you are debiting your supplier's account. Hence, we issue a document known as debit note to the supplier that goods have been written, and two copies are made of debit note. One is sent to the supplier and other is kept with the business for documentation purpose. So, a debit note is issued is one important point, and other important point is that we can record of only those transactions which are of credit purchase and which we are returning back to the business. So when we are returning back, there might be various reasons why a business is returning back the goods to a supplier. It might be a wrong product, wrong specifications, or more number of quantity than required, damaged product. By any such reasons, when a business is returning back the credit purchased goods to the supplier, then it is recorded in our purchase written book, or we also call it as written outward book. And the business issues a document known as debit note to the supplier. Now let us read out the meaning and look into the format of debit note and purchase written book. Purchase written book. When goods purchased on credit are written to the supplier, it is recorded in our purchase written or written outwards. Reading it again for you. When goods purchased on credit, very important, goods purchased on credit are written to the supplier, are recorded in our purchase written or written outwards book. Debit note is used when goods are returned to the supplier. When we are returning goods to the supplier, a business issues a document called debit note. Reasons for purchase written can be damaged goods, wrong products, not of the required quantity, or wrong specifications. A debit note will contain the name of the party to whom the goods have been returned, means the name of the supplier. Details of goods returned and the reason for returning the goods, Each debit note is serially numbered and dated. So here we have the format of purchase written journal book. First column is date, the date on which we are returning back the goods. Debit note number. Because we are issuing the debit note to the supplier, we record the debit note number here. Name of the supplier or the account which we are debiting, the account, the supplier to whom we are returning back the goods. Ledger folio and amount of the goods written back. Next, the format of debit note, let us look into that. Name of the firm issuing the note. So when the name of the business who is returning back the goods has to be mentioned here on the top. Here we are mentioning the debit note number. Here address of the firm and date of issue. The address of business of the firm and the date on which we are issuing. Against whom we are issuing, the supplier's name, and goods returned as per delivery. Challan number means all the documents, the bill number which was issued during the purchase. All such entries have information have to be filled here. Details of goods returned and rupees, the amount of the goods which we are returning back, and the signature of manager with the date. This is the format of our debit note. Now let us look into an example and record our transactions into purchase and purchase written book. Let us read out the question here. Prepare a purchase book and purchase written book from the following transactions. On August 5th, purchase from Ramakant, Delhi, invoice number 6780, 20 televisions at 15,000 each, 5 DVD players at 10,000 each, and trade discount of 10% is allowed. On August 7, 2 televisions returned back to Ramakant, Delhi because they were found defective. Debit note of 211 is issued. August 20, bought from Samay Electronics, Haryana, invoice number 1011, 10 washing machines at 5,000 each and 10 televisions at 25,000 each. Trade discount allowed is 5%. Rate of GST applicable and on above purchases are CGST 9%, SGST 9% and IGST 18%. So as we all know, when we are recording the transactions in our purchase book, trade discount is to be deducted and GST is to be added. We have to add the GST. To give you a quick glance on the GST, GST is nothing but goods and service tax which is applicable on goods. Okay, and now CGST, SGST and IGST are three different taxes that is applicable. CGST and SGST is nothing but a tax which is applicable when you purchase goods within the same state. When there is purchase and selling of goods within the same state, then CGST and IGST is applicable. CGST stands for Central Goods and Service Tax and SGST stands for State Goods and Service Tax. So together 18%, half percent is contributed towards CGST and half percent is paid towards SGST. Now what is IGST? When the transaction or when the purchase takes place between two different states, then IGST is applicable. So IGST stands for Integrated Goods and Service Tax. So our format of purchase book is ready here. Date, invoice number, name of supplier, amount, CGST, SGST and IGST column. Okay, on first entry here on August 5th, invoice number is 6780. We have purchased from Ramkant, Delhi. What we have purchased? 20 TVs at 15,000 each. So 20 into 15,000. 3 lakh rupees is the amount of our TV and 5 DVDs at 10,000 each. So 5 into 10,000. 50,000. So we have purchased only TV and DVD. So total purchases here is 3,50,000. Now here trade discount is allowed. Trade discount is to be deducted. Trade discount at 10%. So trade discount is allowed on total purchases. So 3,50,000 into 10%. 35,000 is the trade discount. Now after allowing the discount, total will be 3,15,000 and GST is to be added. So add GST. Here CGST at 9% and SGST at 9%. So on particular column, 3,15,000, 9% GST and 3,15,000 into 9%. So 28,350 and 28,350. Total of 56,000 is our GST. 56,100. Sorry, 56,700 is our GST. Now we have to find total credit purchases, which is from trade. After allowing trade discount, we have to add GST. So 3,15,000 plus 56,700, that is 3,71,700 is our total purchases from Ramakant. From Ramakant Electronics, this is our total purchases. CGST and SGST is applicable for one transaction and IGST is applicable for other transaction. Just a quick revision here. We have written the invoice number, we have written our supplier. Next we recorded the products purchased, goods purchased, that is 20,000 TV at 15. That is 20,000 TVs at 15,000 rupees, which amounted to rupees 3 lakh, and 5 DVD at 10,000 rupees, which amounted to rupees 50,000. Next, we got total purchases of rupees 3,50,000, out of which 10% trade discount is deducted, and we got the total of 3,15,000. As we know, after deducting trade discount, if GST is applicable, we have to add it. GST we have to apply on the amount after deducting our trade discount. Now our GST is applicable at CGST 9% and SGST 9%. In the particular column, we have deducted, we have recorded our GST at 9% on 3,15,000. Our total of GST is 56,700. We added the total and our total credit purchase is 3,17,700. Now next transaction is about television returned. Let us prepare return book later. Now we are preparing purchase book. So let us first record all our purchase transactions. On August 20, bought from Sama Electronics Haryana 10 washing machine and 5 at 5,000 and 5 televisions at 25,000. Let us make entry for this transaction. 20th August. Invoice number 1011. Samay Electronics. For rupees, what we have purchased from them? 10 washing machine at 5,000 each. So 10 into 5,000. Our total is 50,000 rupees. Correct. Next we have purchased 5 televisions at 25,000 each. So 5 into 25,000, is 1,25,000. Now total purchases will be 1,75,000, right? Out of this, yes, correct, we have to deduct the trade discount, but here trade discount is of 5%, on which 1,75,000 deduct 5%. So 5% is 8,750. Let us deduct that amount. 1,75,000 minus 8,750 is 1,66,250. Here add GST. GST is applicable of IGST at 18%. So IGST column 1,66,250 into 18% is 29,925. So our GST is 29,925. So here our total credit purchases will be, adding the amounts will be 1,96,175. This is our total credit purchase from Samay. I hope you have followed the sum. Now total of purchase book. Total of purchase book is this total amounts will be is equal to 3,17,100 plus 1,96,175. Total of our purchase book for August month 5,67,875. Now we have recorded all our purchase entries. Now let us record purchase written entry. So our purchase written, the format is date, debit note number, name of supplier, amount, CGST, SGST and IGST applicable. So here the transaction is 2 televisions were returned to Ramkant, Delhi, debit note 211. So 2 televisions were returned back on August 7, debit note 211 to Ramkant, Delhi. We are returning back them 2 televisions. Now, at what rate had we purchased from them? We had purchased 20 at 15,000 rupees. Now we are returning 2 at 15,000 rupees. So is equal to 2 into 15 is equal to 2 into 15,000 rupees, 30,000 rupees. We are returning only TV because they were defective, and since trade discount was allowed, we have to again deduct the trade discount at 10% on 30,000. Let us deduct the discount into 10%, 3,000 rupees. So total of this will be 30,000 minus 3,000 after deducting the discount, 27,000. GST was applicable, add GST of both CGST and SGST was applicable. So 27,000 into 9% and 27,000 into 9%. So total GST of 4,860 was applicable. 4,860. Let us add the amount, that is 31,860. 31,860. Total of purchase written. Value of 31,860 was returned back to the supplier Ramkant, Delhi. This is how we have to record the transactions in our purchase book and then into purchase return. Repeating the again in our purchase return also, it will be same, that we have to record the number of goods that have been returned back at what value, and then deduct the trade discount and add GST. So this is how we have to record our transactions in purchase book and purchase return book. We have to record the transactions only relating to business, deduct trade discount and add GST if applicable. GST will be of two types: CGST, SGST together, and IGST is a different when we are the transactions are between two different states. But a very important point to remember that CGST and SGST is divided into half, and the total GST will be 18%. Here you can see CGST is 9% and SGST is 9%. Half of the GST is paid towards the central and half of the GST is paid towards the state government. So this is about the purchase and purchase return book. If you have any queries related to this subsidiary book, please reach out to us in our comment section and we will solve your problems at earliest. Share our videos with your friends, subscribe our channel and like our video. In our next video, we will come back with next subsidiary book, sales book. Until then, happy learning, signing off.